Welcome to the deep dive. You've pulled together a really fascinating set of sources for us today, really getting into the nitty-gritty of Bitcoin's latest moves and, the bigger economic picture it fits into.
Yeah, there's a lot to unpack.
We've got stuff from FX Street, Cointelegraph, Fidelity, Digital Assets, Crypto Times, MyTrade, Swissblock, Moomoo, The Economic Times, Deloitte. Quite the list.
It is.
So our mission here, really, is to boil all that down for you, pull out the key takeaways so you can maybe understand what's driving Bitcoin right now and, well, get a sense of what might be coming next.
Absolutely. It's a diverse mix. Technicals, sentiment, institutional moves, and some pretty big macro factors, too. We're trying to connect those dots, give you that more complete view.
Okay, let's dive straight in then. The price. Bitcoin's been doing a bit of a dance around that, $65,000 level, hasn't it?
It has.
Looking at FX Street and Crypto Times, it seems we're in a range of about 64.3 to 64,700 recently. It did have that nice 10% jump from the weekly low, bumping right up against that $65,000 resistance.
Yeah, but it seems to have stalled out there. Hit a bit of a ceiling.
Right. And why is that 65K mark so important?
Well, FX Street points out something interesting. It lines up pretty closely with the 200-day exponential moving average.
Ah, the 200-day EMA.
Exactly. And for traders, that's a big one, a long-term trend indicator. Plus, it's also a daily resistance level, so you've got this convergence, making 65K a really significant hurdle. Sellers tend to show up there.
Okay, so it's not just a psychological number, there's technical weight behind it. Makes sense.
Mm-hmm.
But on the flip side, we are seeing some, let's say, bullish signals, right? Metaplanet, that Japanese firm, they keep buying more Bitcoin.
They do, quite consistently.
Just added another 319 Bitcoin. That's, $20 million worth? Bringing their total stash to over 4,500 BTC. Feels like a strong vote of confidence, doesn't it?
It really does. And as FX Street notes, seeing a listed company like Metaplanet doing this, well, it suggests Bitcoin's acceptance is maybe broadening out. It's not just crypto-native firms anymore.
Yeah, moving more mainstream.
It feeds that narrative, certainly. Yeah. Makes you wonder what other companies might be thinking long-term.
And it's not just the companies. Trader sentiment seems pretty bullish, at least longer term. Amber Data's findings, reported by FX Street, show the $100,000 strike price. It has the highest open interest.
Huge open interest.
Over $1 billion in notional value. That's a lot of bets on Bitcoin hitting six figures eventually.
It is. And open interest, just to clarify, that's the number of active options or futures contracts out there.
Right. Not yet settled.
Exactly. So having such a massive concentration at the 100K strike really shows a significant chunk of the market is speculating on serious upside potential down the road. It's a concrete measure of that long-term optimism, even if things are choppy right now.
Good point. And we're seeing some green shoots in the altcoin market too, right? Crypto Times mentioned Ethereum and Solana are showing recovery signs, trading near their monthly resistance.
Yeah, that's worth watching.
So it's not just a Bitcoin story entirely.
No, and that's important. Often, the wider crypto market moves somewhat together. So seeing strength in major alts like ETH and SOL, it can sometimes signal a general increase in risk appetite across the board.
Could be a positive sign for Bitcoin too, maybe.
Potentially, yeah. It raises the question of whether that altcoin strength could maybe lend some momentum to Bitcoin itself, or vice versa sometimes.
Okay, but let's not get carried away. There are definitely clouds on the horizon, some real uncertainties flagged in the sources. One big one, the U.S. spot Bitcoin ETFs, they saw pretty hefty outflows recently.
Yeah, that's been a key focus.
FX Street reported a net outflow of over $713 million last week alone, and that followed another big outflow the week before. That's quite a reversal from the initial hype.
It is. This is pretty critical, actually. Those ETFs were expected to be this huge new channel for institutional money.
Right. The floodgates opening, supposedly.
And seeing these consecutive weeks of outflows, well, so value data backs this up, showing weaker flows since mid-February. It could really signal that institutional demand is cooling off, at least for now.
And that could definitely put downward pressure on the price.
Absolutely. It makes you ask, what's causing that shift in institutional sentiment? Is it profit-taking, broader market jitters, something else?
And if that $65,000 level we keep talking about doesn't hold, things could get dicey. Cointelegraph analysts warned about a potential drop, maybe down to $61,000.
That's the next level they highlighted.
And apparently, a break below 65 could trigger over $1 billion in long liquidations. That sounds like it could accelerate a drop pretty fast.
It certainly could. 65K is clearly the line in the sand right now. A break below, yeah, it could absolutely trigger those forced liquidations.
Maybe just quickly explain liquidations.
Sure. So if you're trading with borrowed money, leverage betting, the price will go up a long position and the price falls sharply. The exchange automatically sells your Bitcoin to cover your losses. Yeah. And when a lot of these happen at once, it forces prices down even faster. It's like a snowball effect.
Got it. And adding to this sort of uncertain vibe is the RSI, the Relative Strength Index. FX Street says it's just flatlining around 50 on the daily chart.
Right. Smack in the middle. Neutral territory.
Which basically means
It suggests buyers and sellers are pretty evenly matched right now. There's no strong momentum either way. The market's just undecided, waiting for a clearer signal, perhaps.
Okay, so putting it all together, FX Street lays out a couple of main scenarios. Path 1, Bitcoin breaks through $65,000, closes above it consistently.
Yeah.
Then maybe we see a rally towards $70,000.
Yeah, maybe even testing that early March high around $75,000 if the momentum really builds. That's the bullish case.
Hinges on sustained buying pressure then, getting over that hump.
Exactly. A clean break above 65 would likely pull in traders who've been sitting on the sidelines waiting for confirmation.
Okay, but the flip side, if it fails at 65K, keeps getting rejected.
Then the risk is a slide down to the next support level. FX Street puts that around $58,258.
Wow, okay. That's a decent drop from here.
It is. Failure at resistance often leads to testing support. That 58K area is where you might expect buyers to potentially step back in more strongly.
Okay, that gives us a really good handle on the immediate price picture, the technicals, the flows. But like you said, this is the deep dive. Let's zoom out. Fidelity Digital Assets had some fascinating thoughts on Bitcoin as potentially a macro asset.
Yeah, this is where it gets really interesting, connecting Bitcoin to the broader economy.
They suggest it's sensitive to overall market liquidity, think M2 money supply, and also inflation expectations.
Right. Fidelity's work suggests Bitcoin isn't just moving based on crypto-specific news. They found, historically anyway, over the last decade, some correlation between Bitcoin and CPI, the Consumer Price Index.
Inflation, basically.
Yeah. Though they do note that Link has weakened a bit recently. But maybe more importantly, they saw a stronger tie to forward-looking inflation expectations.
So what people think inflation will do in the future?
Exactly. The idea being, if people expect higher inflation down the road, Bitcoin, with its fixed supply, might look more attractive as a potential store of value.
Right, the digital gold argument. More money printing potentially devalues traditional currencies, but they can't print more Bitcoin.
That's the core idea, that scarcity only 21 million ever is fundamental. In a world where central banks can increase money supply, a finite asset offers a potential hedge against that devaluation, that loss of purchasing power.
Okay, now let's bring in another big macro piece from the sources. U.S. tariffs. This came up in FX Street and Metaplanet, referencing Fed Governor Christopher Waller. He called the Trump administration tariffs a significant shock to the economy. Pretty strong words from the Fed.
Very strong. And Waller's analysis really focused on the inflationary impact. He laid out scenarios. If the average tariff stays high, say 25%, he saw inflation possibly peaking near 5%. If it dropped to maybe 10%, the peak might be closer to 3%.
So a direct link between tariffs and higher prices.
That's the argument. But it's not just inflation. Waller also suggested these tariffs could slow down economic growth, maybe even increase unemployment.
And what about the Fed's response? This was interesting.
Yeah, he talked about rate cuts. He basically said if the tariffs caused a major slowdown, the Fed might have to cut rates sooner, maybe more aggressively. But, and this is key, he called them bad rate cuts.
Bad rate cuts. Why bad?
Because they wouldn't be cutting rates. Because inflation was under control and falling nicely, they'd be cutting to try and stop a recession caused by the tariffs, even if inflation was still too high. It's a very different, much trickier situation for monetary policy.
Cutting rates for the wrong reasons, essentially. The Economic Times also touched on this good news versus bad news rate cut distinction, right?
Absolutely. It's crucial. Normally, rate cuts are seen as stimulating a weak economy or rewarding success in getting inflation down, cutting rates because of damaging trade policy, while inflation might still be sticky. That's a policy dilemma. Much less clear how effective it would be.
And Deloitte Insights seems to echo these worries about tariffs. They also see higher inflation, slower consumer spending, just adding a lot of uncertainty to the market outlook.
Yeah, Deloitte even put a historical spin on it. They estimated these recent tariffs, if they stick, could push the average U.S. tariff rate back to levels we haven't seen since, like, 1909.
Wow, 1909. That really frames the potential disruption.
It does. It highlights how significant this shift could be. Higher import costs almost inevitably get passed to consumers, right?
Oh, okay.
That squeezes budgets, potentially slows down spending, hits overall growth, and the uncertainty itself makes businesses hesitant to invest.
So we've got this potential mess. Tariffs leading to slower growth, higher inflation, maybe forcing the Fed into these bad news rate cuts. Let's tie this back to Bitcoin. Thinking about Fidelity's view of it as a macro asset, how might this kind of scenario play out for Bitcoin?
The million-dollar question indeed. That's complicated. If we get these bad news cuts because of tariff fallout, well, you could argue it both ways for Bitcoin.
Okay, how so?
On one hand, all that economic uncertainty may be persistent inflation.
Yeah.
I could boost Bitcoin's appeal, right, as that alternative store of value, that safe haven, maybe, separate from traditional systems.
Makes sense. The life raft argument.
Kind of. But on the other hand, if we get a really significant economic downturn globally, investors might just flee all-risk assets. They get defensive, move to cash or traditional safe havens, and Bitcoin, being volatile, could get dumped along with everything else.
So definitely a double-edged sword there. Not a simple equation.
Not at all. Very complex interplay.
And while Bitcoin's been doing its thing, the altcoin market hasn't been quiet. Crypto Times flagged that Mantra token OM having a huge crash, like 90%, apparently linked to Team Wallet activity.
Yeah, that was dramatic. And it's a stark reminder, isn't it? The risks in the altcoin space can be really high.
Very high volatility.
Exactly. Stuff like token unlocks, team sales, it can trigger massive sudden price drops.
Yeah.
Really underscores the need for careful research due diligence in that part of the market.
But it wasn't all bad news. AE Argo and FLR were mentioned as top gainers, so there are still big moves happening both up and down, even when Bitcoin is choppy.
For sure. The altcoin market has its own dynamics. And Crypto Times also brought up Bitcoin dominance. That's Bitcoin's market share of the total crypto market cap.
Right. What's the thinking there?
Well, they noted that high Bitcoin dominance is sometimes seen before major bull runs kick off. The idea is investors might rotate into Bitcoin first, seeking relative safety, before maybe getting more adventurous with altcoins later if the market really takes off.
Interesting. So kind of an indicator of market sentiment or risk appetite?
It can be read that way, yeah. It shows where the focus is, at least initially.
Okay, so wrapping this all up, it's clear Bitcoin's path forward is tangled up in a whole bunch of factors. We've got these key technical levels like 65K acting as battlegrounds.
Yeah, finally.
We have institutional flows looking a bit shaky right now, those ETF outflows. Yet we still see some corporations like Metaplanet buying.
A mixed picture on adoption and flows.
And then layered on top is this whole macro situation,
Yeah.
especially the tariff uncertainty, potential inflation, slower growth, and what that means for the Fed and these potential bad news rate cuts.
Exactly. It's that interaction, the technicals, the sentiment, the institutional moves, all playing out against this complex and uncertain macro backdrop, especially with trade policy throwing a wrench in the works. It's a lot to track.
It really is. Which brings us to our final thought for you, the listener. Thinking about this possibility of bad news rate cuts driven by tariff impacts, what does that actually mean for how you see Bitcoin's role evolving? Is it becoming more of that macro hedge, or is it still too tied to overall risk sentiment? How do you factor this incredibly complex mix, technicals, flows, macroeconomics, policy uncertainty, into your own investment thinking, not just for Bitcoin, but really across the board? Definitely something worth mulling over as you watch how things unfold. Thanks for joining us for this deep dive.